Hello and welcome to this episode of Your Financial Planet, a podcast hosted by the Synergy Capital Solutions team. Join us while we share our journey as we navigate life's complexities and provide solutions to reduce the noise around your personal financial situation.
Hello, my name is Caryn Fields and I'm a financial advisor at Synergy Capital Solutions. Today we are joined by Diego Wanderley, a colleague and fellow financial advisor. We'll be talking about retirement. We've been getting a lot of questions about, am I ready to retire? Diego, how do you respond to that?
Well, I'm glad we're doing an episode about am I ready to retire, right? There's a lot of questions from clients about the subject. And is it really enough? Do I really have enough to retire or not? Am I ready financially to be retired? So I'm glad we're doing this episode again, like I said. And first thing we want to know is, what does retirement mean to you? Then we want to know, do you have a plan?
Yeah, we've been getting a lot of questions, and it always comes back to the plan because you're right. Like, what does retirement mean to you? Are you going to be sitting on your couch watching TV all day, or are you going on a cruise around the world and then another glamorous vacation to Europe? So things kind of play out differently depending on what your plan is when you retire. And yeah, about half Americans, according to a Public First poll, don't feel confident in their ability to retire and maintain their standard of living comfortably. So if they had a plan, our question is, would that worry go away? Would that number go down? And with that plan, we know we're controlling what we are controlling, but we can only control certain things, like spending, savings, our allocation and whatnot. But there's a lot of uncontrollables that we can't plan for, correct, Diego?
Yeah, like for example, we talk about the market, the healthcare costs, inflation, things that is not under our control. So we have to make sure you have a plan that is designed for you and your family. And then we can talk about, we can go to the next step and see if you actually are ready to retire or not, right?
Yeah, exactly. And it's not a one size fits all. And we talk about this constantly with clients when they ask, like, how much do I need to retire? That it needs to really be kind of tunneled into your plan. But you are going from kind of an accumulation mode into decumulation mode. So you're saving up your assets and all of a sudden you're using them. So it kind of is a strange feeling. So that's the one thing. It's like, are you mentally ready for it? But when looking really at the basics of answering, am I ready to retire? There's kind of three bullet points that we like to think about. So it's kind of the spending or what's going out, the income, what's coming in, and then the legacy you want to leave. So we want to touch on each of those. But Diego, do you have anything to add before we jump in?
Yeah, I think there's a lot to do. Also, a lot of clients say that they want to retire, that they're ready to retire and whatnot. But you hear a lot of people saying, I might want to work a little bit, right? Part-time or not. It's not about sitting down, not doing anything. It's about being financial free to be able to stay home and not do anything if you want to, if that's what you want to accomplish, right? So I like to touch on those points that you mentioned too, Caryn, because I think we can better determine the picture of like how it should kind of look like for the overall family household. And we can start with the spending.
Sure. Yeah, so when it comes to spending, like what is going out on a monthly, yearly, weekly basis? And so the first thing is to kind of create that budget. You need to know what you're going to need to live the lifestyle you want in retirement. And we kind of break that down into two buckets. I like to say it's the essentials. So you have to pay if you have a mortgage, your mortgage. You have to pay your utility bills. You have to go to the grocery store. So all of those are kind of essential. But then on top of that are your discretionary. So if you want to travel, if you want to do any gifting, any extra expenses, shopping, maybe for new clothes, that kind of thing we would see as discretionary. And let's bundle it. Let's get a number for each, but then we want to make sure that if you are going to pull the trigger and tell your place of work that you're stopping work, do you have the right amount to cover that essential and discretionary spending?
Yeah, and we don't see a lot of change between the people when they're accumulating, when they're still working, comparing to when they retire, right? The biggest thing there is going to be, well, you're not accumulating anymore, so you don't need to save that money anymore. Now we need the income, and we can touch on the income next. Is we need the income that you build throughout this life on your retirement account to live off the life that continue living the life that you wanted to live, right? And not making changes to your lifestyle. That's ultimately the goal for everybody that wants to retire.
Yeah. Yeah. And if you did want to make a change in your lifestyle, like let's make sure we go from that. But yeah, we can jump into the income side because yeah, you mentioned that you're going from the accumulation to the decumulation. Or I like to say like you were getting a paycheck for a company from a company, now you're getting a paycheck from yourself. So there's kind of different strategies that we can go about in regards to creating that paycheck and that income. Do you want to touch on some of them?
Yeah, no, that's great because you talk about, the retirement account that you've accumulated, the 401ks that you had. Now that you can roll this over into an IRA, right? And then take income from that IRA. Later on in life, you're going to have requirement minimum distributions, but until then, you have buckets like the Social Security, for example, that we can talk more into detail about it. But on top of that bucket that you have from Social Security and requirement minimum distribution, you get income from your retirement accounts, right? Your new IRA account. And that income should come from the retirement until at least you have the ability to take from the Social Security. There's a little trick on Social Security, Caryn, that I
Yeah.
like to talk to clients and people like to start Social Security when they
Yeah. Return.
reach out the full retirement age, right? But they don't always realize that they have about an 8% increase every year they wait. And it's very hard for any financial advisor to guarantee an 8% increase on your returns, right? So
Yeah. So yeah, what Diego's saying is once you hit full retirement age, your benefit jumps 8% each year that you don't that you delay until age 70. And it's a guaranteed 8%. So I mean, if you look at the markets recently, they're up, down, and eventually like over time they typically go up. But with your Social Security, you're locking in that 8% growth year after year until 70. Um, you
yes,
mentioned require minimum distributions. Do you mind kind of explaining that and fleshing that out for people who aren't used to hearing that term?
right. When you reach an age, usually 73, then the government wants their tax back, right? They want the tax from this account that you have been accumulating throughout your life. And now it's time to take the requirement minimum distribution from those retirement accounts on a yearly basis. The government says, oh, you have a certain amount of this balance on this account. You need to take so much out. So you're paying back yourself, right? But now you're paying back with the taxes because you never pay tax on those accounts. It's been growing tax deferred. When you reach that requirement minimum distribution age, you are required to make a distribution from those accounts, right? So it's another bucket that you're going to take money out of that retirement account to pay yourself to be able to live the lifestyle that you want at retirement.
Yeah, and the last part of, I guess, your income could be kind of the non-traditional parts of it. If you have real estate that's throwing off income, if you have an annuity, some people still have pensions. So those sorts of income, if you're doing something on the side for fun that's generating income or royalties, some people have, then we will take that into account as we plan. And it's not the same necessarily year after year because, like Diego said, like when you hit the age that you have to take a required minimum distribution we'll pull that money out, which means that we might take less from a taxable account. When you're taking Social Security also, we might not need to take as much out of your retirement accounts or taxable accounts because you have that Social Security coming in. So it's kind of playing on the numbers based on your needs, your taxes, kind of all of the pieces to the puzzle.
Right. At the end of the day, it ties back to the plan that we started, right? So how much do you need? How much do you have?
Yes.
Can we make this happen or not? So it's good to understand the budget, good to understand the income, what is coming from and whatnot. But I think the last bullet point that we can talk
Yeah.
about is legacy, right? Caryn, do we want to leave a legacy for for the kids or for whoever? Is that part of the plan as well?
Yeah, and for some it's not. Some people say, I'd like to spend my last dollar on my last day. My response is, when's that last day? We'll plan for it. But some
Yeah.
people do want to leave a legacy, whether it's charity, like Diego said, if they have kids or family. And so being able to plan for that and making sure all the pieces are in place so that when the time does come, things play out the way that you want them to be. And they're not surprised things don't go to your state or whatnot because you didn't have that all laid out.
Yeah, I have a lot of clients saying, I want my last check to bounce.
Yeah.
It's a great question. When is that going to happen, right?
Yeah.
So we don't know. So that's why we need to plan ahead. We need to plan that you're going to have some leftover at the end of your life, right? So it's important to have that planned out, making sure that it's the withdrawal rate that you're taking from the retirement account is sustainable.
Correct. Yeah. I mean, if you're pulling 10, 15%, your portfolio might not be able to keep up with that, meaning that year after year, your asset level is going to go down. If you're pulling 3%, your asset level might be going up year after year. So it's planning on, if that is the case, fabulous. What do you want to leave that money to? What do you want to do so that when you're no longer here, your legacy lives on? And so, can you think of any other topics that we haven't touched on yet that are important to someone who's considering that question, like, am I ready to retire?
Right, there's so many other things that we need to discuss,
Yeah.
right? Medicare, healthcare expenses, long-term care, housing, and the strategies that you're going to use upon your retirement, right? So there's so many things so many details that you have to sit down with a financial advisor to talk about it, to make sure you actually are ready to retire.
Yeah, there are a ton of pieces that go into it, like you were saying. And like even the fact that like maybe you live in, I mean, Diego lives in warm weather in Florida, but I live in Chicago. Maybe I want to retire to Florida. And what does that look like? And what are the pieces of that puzzle?
Right.
So,
Even the state taxes, right? It changed. So there's a
exactly.
lot of pieces to the puzzle, but that's why I go back to the plan again. We need to sit down and have a plan. It's never too early to start planning or never too late to start planning. You need to understand your finances. That's the most important piece.
So the big takeaway sounds like make a plan, have a plan that's specific to you, and that it doesn't need to look like your neighbors or your best friends, but it needs to be your specific retirement plan.
Yeah, it needs to be tied to your household, your specific needs, right?
Yeah, and I'll just put like working with an advisor who knows you, knows your goals, knows what assets you can't, like you have, will pay dividends in retirement and beyond.
It's the last piece I want to say, Karen, it's very hard to give an advice if you don't understand the full picture.
Correct.
Right? So an advice that you trust, someone that you trust that understands your goals and needs, that's going to be your best bet because you need to understand the financial of the household to be able to give the best advice. There's no right answer, a one single answer for everybody. There's not a magic number that you need to retire. It depends on your expenses, depends on your goal, depends on what you have.
Yeah, no, I completely agree, Diego. Thank you so much for talking with me today, and kind of hopefully everyone has some tidbits to take away and maybe stuff that they want to come dig into more with us. And whether you are just starting your financial journey or you're thinking about retirement, we're here for you at Synergy Capital Solutions. Thanks so much.
Thank you, Caryn.
Bye-bye.
Bye.
Thank you for listening to Your Financial Planet. Please press the like button below if you enjoyed this episode and hit the subscribe button so you can stay up to date on all our future episodes. The team at Synergy Capital Solutions is always here for you. Reach out to us via email at hello@synergycapitalsolutions.com or you can call us at 888-363-4546 or check out our website www.synergycapitalsolutions.com. Synergy Capital Solutions is a group comprised of investment professionals registered with Hightower Advisors LLC, an SEC registered investment advisor. Some investment professionals may also be registered with Hightower Securities LLC, member FINRA and SIPC. Advisory services are offered through Hightower Advisors LLC. Securities are offered through Hightower Securities LLC. This is not an offer to buy or sell securities. No investment process is free of risk and there is no guarantee that the investment process or the investment opportunities referenced herein will be profitable. Past performance is neither indicative nor a guarantee of future results. The investment opportunities referenced herein may not be suitable for all investors. All data and other information referenced herein is from a source believed to be reliable. Any opinions, news, research, analysis, prices, or other data or information contained in this presentation is provided as general market commentary and does not constitute investment advice. Synergy Capital Solutions and Hightower Advisors LLC or any of its affiliates make no representations or warranties expressed or implied as to the accuracy or competitiveness of the information or for the statements or errors or omissions or results obtained by the use of this information. Synergy Capital Solutions and Hightower Advisors LLC assume no liability for any action made or taken in reliance or relating to any way of this information. The information is provided as of the date referenced in the document. Such data and other information are subject to change without notice. This document was created for informational purpose only. The opinions expressed herein are solely those of the authors and do not represent those of Hightower Advisors LLC or any of its affiliates.